Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin, and we're going to be talking about time between tests of the Bitcoin bull market support band, which in fact is the 20-week SMA and the 21-week EMA. If you guys like the content, please subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So we've done videos on this before, but we got a lot of new people in the space, and every time we go into these types of manic bubble type phases, we have a way of bringing a lot of new people into the space. So welcome everyone. We're just going to take a look at the Bitcoin bull market support band, which again is the 21-week EMA and the 20-week SMA, and look at times between tests. Okay, so the first one was around 91 days. The second one was around 70 days. Here we had another one that took us around 84 days. This one took us around maybe 63 days from test to test. This one was 91 days. The following one was around 63. And then the final one was around 126 or so. Okay, so we had a lot of tests of the 20-week SMA, one after another throughout the bull market. Now, one thing we do know, if this recent move has taught us anything, is that every market cycle will have its own characteristics. We'll remember each market cycle very differently. So for instance, this market cycle was more or less just a fairly well-defined structure, mostly just straight up. This cycle so far has been anything but that. Okay, we came up and had a 2019 peak, and then we came back down, and now so far we came up all the way, and we're at a potential, at least a local top in early 2021. We're of course not saying it can't go higher in 2021, but we also recognize that there will be times during market cycles where we test this critical support area. So to say that it's not possible to go that low, again, if you haven't been around Bitcoin for a long time, frankly, you have no idea what's possible because it has happened many times in the past. Just because you came in at the top does not preclude Bitcoin from going back down and testing it. Now, we're not saying it's going to test it, but we're saying we recognize that if you just simply look at the time between these other tests, it tended to be capped at around 126 days. We had a couple times where it was 91 days. Here was 84 days, and then 63 and 70. So if we look at the present day, let's look to see the time between tests. So when we moved above it, it was here. I don't know if you guys want to count that one as a test or not. If you do, it was 84 days. Okay, and if that one counts as a test, then the next one from test to test would be around 49 days. And then if you combine them into one, it would be 126 days, which was the same amount of time between the final test of the last market cycle. Now, how long has it been for the recent test? So, as measured from the bottom, when we left it, so far it has been around 105 days. If you want to take it from this weekly candle, it could be 98 days. It depends on exactly how much tolerance you want to give it. Typically, I would actually probably count that as testing it because that was, but at the beginning of that week, we were pretty close to the 20-week SMA. So let's say it's been about 98 days. Now, to get to the bottom, or to come back down to it within 126 days, would mean we need to get there within the next month, okay? That's simply what it would mean. Now, do we have to? No. As we said before, this market cycle could be completely different than the last market cycle, and to some degree it already is, right? It already is different. With that said, we do not want to say or pretend like it can't come down to this level just because it would represent another 30% drop, 35% drop. Just because it would represent a 35% drop does not mean it cannot happen. One thing to consider, as we've said before, is that even if we were to come down to it, these will continue to move up, and by the time we test it, they could be over 20K potentially. And we still don't know if we'll hold it as support. So the purpose of these videos, again, is not to claim that we know where Bitcoin is going, because we simply do not know. It could go back to 42K in a week if it wanted to, and everyone would look back and say and just say who bought the dip, and people would give it an upvote. The point is to consider all possibilities, because it is when you do not consider all possibilities that you are the person buying up here and then wondering what the hell happened down here. Okay, and this is what we want to avoid. So we're not trying to claim on this channel that we know what will happen. We just want to consider all possibilities within the multiverse that could happen so that you can plan accordingly, knowing the risk involved. Okay, so if you are buying at 32K or 31K and it works out and it goes to 40K and it goes to 50K in the short term, don't let anyone ever tell you that it was luck. You're taking a huge risk at this level, a huge risk. Make no mistake about it. Right? There's a huge risk involved in coming in and buying at that level, because naturally it's easy to think, oh well, it's down 23%. It seems like a good buy, especially if you were buying it at 42K a couple days ago. But when you look at where we came from, it's still up from the 20 week when we left it. It's still up 200%. And we were there in October. Okay, we were there in October. So it's not like it was that long ago. So what we want to do is we just want to keep an eye on this bull market support band. And if we were to fall to it, again, we just want to make sure we hold the line to maintain the integrity of the bull market. If we don't maintain the integrity of the bull market, or even if we do come back down, right, it's yet another lesson of never let a good bubble go to waste. And that includes, the altcoin bubble as well. Now, one thing to consider is back in 2017 when Bitcoin peaked, a couple weeks later, it had a smaller rally, not quite taking it to its peak. And during that rally, altcoins just went crazy. So we want to keep an eye on that as well. And a lot of times during these types of moves, you can get these dead cat bounces back up, where we think we're getting on track and we're not. But that's just one thing to keep in mind as well. Again, I am a Bitcoin bull, even if you don't believe it. It's just that for me, when we get extended off the 20 week by well over 100%, just based on historical data, you should be cautious. You really should be cautious when you're getting off the 20 week by over 100%. In fact, if we go look at, say, the log of the price over the 20 week, okay, the only time during the last cycle that we were extended by that much was the final peak, and we even went higher than where we went this time. So that just shows you how far extended we were. And it also shows that if you go to 0.0, which implies the price is the same as the 20 week, right? Because the log of the price divided by the 20 week, if it's 1, that means the price is the same as the 20 week. And if it's 1, then it means that is 0. So then if you're holding support at it, then you're at 0. And you can see the last bull market, we were holding support at that level on the weekly time frame. And we held support here. We said if we hold support, sentiment can change on a dime. We also said, when, as we're coming up this, that it can change on a dime going back the other way too. So don't misunderstand how quickly sentiment can change in these markets, because now there's all sorts of people that are really upset because they poured too much money into Bitcoin at the peak, and now they're worried about where it may be headed. Well, yeah, Bitcoin does have a way of bailing people out. If you look at its historical data, that's what it does, is it bails people out of making silly choices at the worst possible time, okay? It bails people out. Even if you bought here, you were eventually bailed out. If you bought here, you were eventually bailed out. Here, eventually bailed out. Again, here and here, all these peaks you were eventually bailed out of. It was a matter of time. And so, when we look back at this, we're going to say, well, where are we in terms of the regression band? And this is just something we will also want to keep an eye on, because so far we have not made it to the upper regression band. I feel like if we make it to the upper regression band, then this cycle has been completely different than every other cycle if we were to make it there this quickly. Because if we continue going up at this rate, I mean, we would be there in a couple weeks at this rate if we continued to go up at this rate. You can see that it shows 38,000 again. It's because it shows the weekly close, not the the current price or the daily close. It shows the daily close. We actually know we're closer to 32K. So we just want to be pragmatic about things. Again, we're not claiming anything about where it's necessarily going. It's better to react to price movements than to claim what's going to happen, because if Bitcoin goes to 42K or 100K or 200K or wherever the hell it goes, if you don't ever react to it and try to actually profit from that type of a move, then does it really mean a whole lot? Of course, you can go with the buy and hold strategy if that works for you. I don't really think of things in terms of, oh, how much Bitcoin do I own on any given day? I think of, okay, does this make sense to buy this investment now, to take out this investment now? And then I look at it in terms of a percent move, and I move on with my day. Okay, that's more or less how I look at it. I understand that doesn't necessarily fit everyone's strategy, and that's okay. We all have different strategies. We all have different risk levels or risk tolerance levels that we're okay buying Bitcoin at. I can tell you, for me, this is still not a region I would want to be buying Bitcoin. Doesn't mean it won't go up. It does not mean it won't continue to go up. And then you guys can say, oh, hey, remember that time Ben didn't buy Bitcoin at 32K? But the point is to say, is it worth the risk at this level? And for me, it's not. Again, it doesn't mean it can't go up, as we said. To me, it's just not worth the risk at this price. But if we were to drop back down, it could quickly become worth the risk. You have to remember, there's other investments out there besides cryptocurrency. I know that's almost blasphemous to say, but there are other investments besides crypto. And the whole idea of this channel is to chase the most attractive risk-adjusted returns. And for a while, that's been crypto. But for instance, recently, I started putting money into some other stuff that we talk about on the premium list, into the cryptoverse.com. And hopefully it's a way of just systematically offsetting risk from one asset class to another. So again, will we bounce and continue higher and look back and say, who got shaken out? Or will we come back down and really test the bulls? I don't know. I would prefer this option. I would prefer coming back down, because I have sold some of my Bitcoin. A lot of it I sold to Ethereum a few weeks ago. Recently, my Bitcoin sales have just been going out to stable coins, which I've been earning interest on. But I would like to accumulate my Bitcoin if given the chance. I just feel like 32K for me is too high. Again, it's not financial advice. It's just, for me, it's too high. Maybe for you it's not. And if it's not for you and you want to accumulate here, that's perfectly fine. I'm just trying to communicate, what my strategy is and what I find worth the risk and what I find not worth the risk. And I try to communicate I try to communicate that as effectively as possible. The hard part with this type of stuff is, we spent a year and a half accumulating Bitcoin, and we spent a year and a half just saying, like, this is the accumulation phase, right? Let's look at the regression line and say, oh, we're in accumulation territory. We spent so long discussing accumulating Bitcoin. The problem is that once it starts doing this thing, it brings in a ton of new people to the space, and these people don't want to hear that buying Bitcoin at 42K or even 35K or 30K is not necessarily the smartest short-term decision. Doesn't mean it won't work out. It just means that they're taking on a lot of risk. So it's the hard part, right? I mean, the people that got in this region, of course, are happy, but when the asset goes up 4x in 3 months, you're naturally going to draw a lot more attention to the space, and in doing so, if you come across my channel for the first time and I'm sitting here saying, oh no, I'm not buying Bitcoin, and you're probably thinking, oh, this guy's not buying Bitcoin and all it's doing is going up. But remember, we were buying it for a long time. It's all about the risk-adjusted return, not the return itself. It's what type of risk are you taking on by purchasing it, and if it flies, then you're gonna take advantage of that move. So that's ultimately the hard part is figuring out, okay, well, it makes sense for the people that got in over here. They're ready to go. They're probably helping to cause the sell pressure up here at the top, right? But what is that? It doesn't do anyone any good who's coming in at this level. Another thing we've talked about are the regression rainbow. And I'll just pull it back up. And we've said this before, the 2.5 log line rule. It probably won't hold forever, but if you look at this peak and this peak and this peak, you can see that we dropped 2.5 log lines each time. So from peak to peak, we dropped 1, 2, 2.5. From peak to peak, we dropped the rest of that half, 1 and 1. So 2.5 log lines down. Do you care to guess where this one peaked at? So far, we know it could go back up. We're not going to say it can't. But where has it peaked at so far? Well, 1 log line down, 2 log lines down. About 2.5. Minus 2.5 log line rule. That's exactly where we came up to. I personally think there's a good chance that this will hold resistance for a long time, if not forever. It might not. And you might say, well, does that mean it can't go above 42K? Absolutely not. These lines are monotonically increasing. By the give it a couple years or so, it's going to be pushing 100K. So you have to consider that just because it's at 40, the halfway point is around 43K, 42K, somewhere in that ballpark. Just because it's there, it's moving up every single day. Every single week, every single day, these log lines are moving up. So it could be that, we come back down, and then ultimately we come back up to it and peak there over 6 figures. And if that were to happen, it could still be that, oh, we stayed 2.5 log lines down from this macro bubble peak. So remember, all models are wrong. Some are useful. The negative 2.5 log line rule is probably garbage to some degree, and it probably will be broken one day. If we were to go to 50K, if Bitcoin said, just kidding on this fake out, we're actually going to 50K or 60K, 70K, 80K in the short term, then yeah, completely worthless at that point. In terms of thinking the 2.5 log lines down means anything. But for now, it is a way for us to better understand the idea of diminishing returns from one cycle to the next. Right? The law of diminishing returns doesn't mean you can't make a lot of money. It just means you should probably be aware that it's going to be harder to push the market cap up as many multiples as it was last market cycle, simply because it takes a lot more volume. I get the institutional argument. I get the institutional money. I get the argument. We needed that money to get to 6 figures anyways. So it's just the natural progression of the amount of volume that needs to come into the space to somehow drive this to 6 figures at some point in the future. Okay? So, again, we're just looking at a lot of different models. We recognize all of them are ultimately going to be wrong. Hopefully some are useful enough to help us make better investments. Again, none of this is financial advice. It's just my opinion on the market. Remember to subscribe to the channel. Let's go for 90,000 subscribers. Give the video a thumbs up. Also, check out the Telegram channel, which you can find a link to in the description below. Finally, if you want access to the premium list, to better understand how I'm navigating the market, check out intothecryptoverse.com. You can find a link to that in the description below. That'll wrap it up for the video. I hope you guys enjoyed it. Subscribe, turn on alerts, and I'll see you next time. Bye.